What's up, everyone? How's it going? Welcome to today's market analysis session. As you can see here today, we took a total of two trades today, and one of those trades happened to be a pretty nice winner, 23 ticks, and the other one we got stopped out for break even. We did get around 16 ticks in profit, but we were unable to secure any of that profit. I think I know why for this, and for this one, it's a pretty good trade, but there were mistakes made in that as well that could have been improvement, and you'll get to know the unfortunate truth of this trade as well. So let's get straight into it. So I'm just gonna go ahead and analyze the trades which I took. I'm gonna start changing things up a little bit, right? Because let's see, pretty weak. Nah, never mind. I take back what I said. So essentially, we came in the day inside of this general range before there was a supply zone here, but we broke out of it right as we started heading up. Essentially, we were looking to identify direction right as the market opened, and the market was pretty quick to provide us with that confirmation that price is going to continue to head higher. If you take a look at our hybrid analysis we did this morning, you'll get a better understanding of what I mean and a more comprehensive look as to the things that I'm saying. Essentially, what we saw was that we're hovering in a zone region. The high volume node is down here. So we were between two ideas. We are still bullish because we made this big imbalance towards the downside that we still haven't completely filled. And with the bullish state of the market, I would prefer and would expect the market to always continue higher, right? Almost always your buy should automatically head to the long side. I mean, that's not the right way to word things. Scrap that, right? Let's put it this way, right? Some days your biases are positive, some days your biases are towards the downside, right? But if you look on a sample size of over of thousands of days, what you'll notice is that many more of your days had an upwards bias than a downwards bias, or else your biases may have been wrong. Because over the last 1,000 days, much more of them were towards the upside. And if you're a profitable trader, you're likely going to see that as well with the trades that you took, right? Much more of your winning trades are going to be longs as compared to shorts, depending on the types of trades that you take. But the quantity of longs is typically higher. So, of course, I had two preferable outcomes. One is that we head down to the high volume node and wait to seek a reaction there. And the other one is potentially we just continue heading up higher into here, trying to seek out these all-time highs or get a bit closer to them. And our second preferable outcome was actually correct. We did just have a pretty bullish day, pretty decent price action day as well, despite it being Monday. And the same applies here on NQ. And on the VIX as well, we see that there's much more room for us to head down on the VIX, much more room for us to head up on our equities. So with that being said, let's start analyzing, see if there's any places that we've missed, and go over the two trades that we've taken here today. I don't want to keep these episodes too long every day. Typically, they are going to be anywhere from 15 to 20 minutes-ish. I think that's the perfect time to get through the entire session and go over these two trades. If I just gone over these two trades without giving any context or anything of that nature, I should be able to knock that out within 5 to 10 minutes, but because I want to make sure that I didn't miss anything and see what I have missed within the entire market session, it might be in the spans of 15 to 20. after we took our second trade and we got breaked out, we were kind of AFK for a bit, came back, and then at 9:50 we basically got off the charts. So really want to see if there's any opportunity presented itself after the time which we exited. I'm going to be looking for that as well. So with that said, let's dive straight into it, right? So, but before we head into holy crap. But before we head into it, Trump, the only news that we had to worry about was Trump was meeting with some prime minister at 10 a.m. Central Time, which if he's delayed should span until the end of our market session. So really no news we had to worry about at all. So now let's get straight to it, right? So we're at this position, and right when market opened, we saw very aggressive bullish potential getting pushed in. And what we saw was that there was main liquidity up here. So we want to see how price reacts to that region. And taking a look at Bookmap, right? This was our main liquidity, or around that general region, and we have this 6750 as well. Now we're seeing how price reacts at these regions, right? If we're easily able to break through and flip these levels continuously, it's pretty bullish, and we may even be able to continue this higher. But what we're seeing is that we have passive sellers trying to defend, but as you'll soon see, these buyers are able to blast through them like such. And now within these first 10 to 15 minutes, price is inducted with lots of volatility, perhaps even certain unpredictable volatility with our strategy at least. Of course, some strategies are going to be able to make some solid predictions within even this high volatility regime, but for our strategy and system, we need just a certain amount of market conditions to make it work. First 15 minutes typically is associated with too high volume, as you can see, 41k, 25k, 18k. After that, it starts to get a bit more settled out. Anything around 20k, but not closer to 30k like this, is pretty decent. 10 to 20k is a range that we're looking for in terms of candle by candle volume on ES. And that's what we see after. As you see, we head up until this 6750 area and take out that liquidity, which we do have marked right here. Yep. So we push up, break through that liquidity, and as you'll go ahead and see very soon, this actually takes us into our first trade, because our first trade was actually taken quite early, 8:55. So it's going to be very close here. What we see is that we have this 6755 region, right? Now, still price hasn't necessarily directed itself into any direction quite yet, right? Because we don't know where sellers are getting absorbed, if they're getting absorbed. What we know is just that there is a selling barrier here. And now what we see is that this selling barrier emptied itself out. So there's nothing preventing us from heading lower. And as you'll soon see, we get really close to taking out that 6755 liquidity, and then we head down. As you can see there, we get really close to that 6755 region. We're actually one tick below it, so we're actually fighting that region, but as you can see, there's not much volume up there for anything to be significant, right? Essentially, we're getting very close to the region, but then sellers are coming in. Now, how I comprehended this, unfortunately, is that we came down, right? We came down pretty, but I see this large aggressive buying potential occurring, and the direction does seem to be towards the upside, right? Because if you take a look on the, I wouldn't expect price to suddenly just shift and head down to 6730, right? Because there's no reason for price to necessarily do that. Majority of the volume is here. Price wants to navigate around where the most volume is being transacted and where the most passive orders are being set. And as we see, a lot of passive orders at 6740, lots of and even more passive orders within 3 clusters above. So automatically, I am going to be in a bullish bias simply because of the aggressiveness that we've gotten so far and that continuation of the aggressiveness that has been so close to breaking the 6755 region. Now, we came down, and because of what I saw, I'm not going to lie, I do enter longs once we start to rebalance, like right around there. Let's see where I got my entry. 6748.6748.75. So right here, pretty much, yeah, exactly right here. This was where I got my entry. Price went down, got into a really nice value area, right? The value at this area for longs is much better than any place else. So we enter longs right here. We have our point of control here as well, high volume at this region. Now all I'm looking for is to see these longs pop in. Our stop loss is placed around this 6742 region, I believe. 6743. So around that region. And we took the longs. I'm going to be honest. Where we took the longs, we should not have taken the longs. We needed to have waited for more confirmation. The idea and root basis of the trade, however, was a good idea. Anytime where we see something like this, a big continuous trend towards the upside, and then we see a sudden spike of sellers like this, in which there are passive liquidity and the spread of liquidity still looks bullish, this provides you a really good value to enter longs, even if it doesn't work out. The value to enter longs here is going to be very good, and our job as traders is to get good value entries on either longs or shorts depending on what we do. Because think of it as dollar cost averaging. When you dollar cost average, you want to get in at a low price. When you long, you want to get into a low price before it goes up. When you short, you want to get in at a high price before it goes down. That's the entire concept of value-based trading. Now, we don't know if this value is going to work, but we do have several variables around it, such as the passive liquidity right here, and the fact that price did make a small splurge up. But that's not enough, and that's why we should have waited before we pulled the trigger on this trade. And you'll see why we got our karma on that as well. Lucky karma, I guess you could say. But as you can see, the price continues going down again, but right there. This was where we should have entered realistically, right? We saw price start to go up. Sellers tried stepping in once, tried stepping again. Now these buyers are coming in. What we see is this buyer urgency right here. 142 passive buyers splurging in right at this point, right? And these buyers do happen to get filled. When they get filled, that's when we should have gotten our entry, or when we saw that appear, that's when we should have gotten our entry. Because if we take a look at it, this doesn't happen to be a spoofing order at all, because spoofing orders that tend to move the markets manipulatively, those tend to be much larger. This tend to be a simple institutional participant trying to get filled in, and as we see, this participant does happen to get filled, and we could have gotten our entry around there, 6747 after a reaction. 6747 was when we got the reaction. Now we have sellers there, but we push up higher, and now I see that large buyers again. So 6748 could have been our best entry, right? If we did that. And I mean, honestly, that would have been 3 ticks lower, and let's take a look if it was 3 ticks lower. That would have been a 1.5 risk to reward instead of a 1.15 risk to reward. So it's a lot better. And there's more confidence in a trade like that as well, because when we see that buying aggression start to occur, that buying aggression starts to come in with a decent amount of strength. That's interesting. Now, we do have passive sellers defending that area as well. Uh, But essentially where we kept our stop loss was below this seller absorption, which here we kept it below this wick because that initially was our lower wick. After this candle right here where we saw this buyer absorption and everything of that nature, we were able to move our stop loss up to match all of this seller absorption that we've been seeing, right? So honestly, right when it turned 10 a.m. and we saw this action occur and we see this big branch of seller absorption that we've been seeing in this 8:55 a.m. candle, that should be a pretty sufficient criteria to get an entry in to target this 6755 region, because right now, I can't lie, the longs look immaculate, right? Came down to a good value area. Buyers started stepping in. Buying urgency started stepping in. Buyer urgency was taken out, but it's still revolving around that level. It's not going much lower. Then we see passive sellers coming in. Not seller urgency per se, but passive sellers, right? Because the sellers were not coming in. They were trying to defend price from going upwards, but price was able to take those out as well. And we do have quite a bit of buying delta at this region, right? So buyers are very powerful at this region. Some could say they're getting absorbed at that region. Some could say that whenever we get to that region, buyers are powerful. There's multiple ways to interpret it, but it depends on the context, right? Because if we see buyer absorption here like this, that could be considered buyer absorption because we're starting to see a selling move down. Then that could be valid. But more of such, the footprint will do much more. But as you can see, right at that 10 a.m. candle, we start to see the longs occur. And we eventually get our target taken out, which is this 6755. And honestly, this actually does happen to work out with their spoofing play as well, because this order right here, what would we consider it, guys? We would consider this an irregular sized, potentially spoofing order. And when something like this comes into play, what do we expect price to do? Price would want to go away from it, right? Price might want to go down. No matter how much price will go down, we don't know. But price would want to go down, even if that's like a very small amount. Price would automatically get, typically, not always, would typically navigate away from this, allowing this spoofing order to get a good value entry for the longs at the point of control to capture that. And what we happen to see, because in the past I used to think of these as strong invalidation signals, but now I think of them as benefits. As you can see, we went right to that point of control, 6747.5. And then what you'll happen to see is that these buyers actually take out that order, right? And surprisingly enough, that did not seem to be a spoofer. And if it was a spoofer, potentially they wanted to get their cells filled too. Something interesting is essentially going on there. But what we know was that the overall mechanism actually happened to work out, right? Went away from it, the order was taken out, whether by aggressive buying or by them just taking that order out. They took the order out, and then buyers have come in aggressively and taken it out. That aggression is continued all the way up until our target. And that's where TP is hit. Every single thing that we've discussed, in especially this trade one, was described in immaculate detail using Orderflow. And that's one of the many benefits of Orderflow. But before this video gets too long, it's almost already 20 minutes. Let's keep going on, right? And honestly, I'm not going to go into much detail about the second trade, because why did we take the second trade, or why were we more inclined to take the second trade? Well, usually we take one ES mini as a risk size, right? But last week on Wednesday, we had to take a MES, like 2-tick win or loss, to keep the account open because of the inactivity rule. So our trade of it was simply open on MES instead of ES, right? So, thinking that we were entering into ES on this trade, what we actually did was we entered in one MES contract. So instead of making around, how much was it, 230, instead of making around somewhere around $260, we made $26. And that was the unfortunate thing about our first trade. Now the second trade, we happened to be in $150, around $150 in profit at the peak, but we did get stopped at break even, which with fees made our total for the day go down to $22 in profit. So I mean, not going to complain at all because our trade analysis and our trading was not bad today. It's just one silly mistake. I think this was where we entered past that. Okay, our second trade, we saw price break through this region, and then we saw price make these seller barriers lows. Right around 905, we came down to this buyer region, saw a bit of seller activity there get absorbed, buyers come in, and where are we targeting? We're targeting the 6760 region, right? Now, not a bad idea, but we do have this block of seller liquidity that is preventing buying from going higher. And typically what price does, it doesn't always break through both liquidity levels at the same time. We cannot assume that. What we can assume is that it takes out one level, then we head down, it takes out another level. We take out one level at a time. We should not have the mindset that both levels are going to be taken. Here, we risk that we're going to head up to 6760. That's where take profit was. But in reality, we only got to this region, our 6758, because that's where Bookmap liquidity was. And honestly, if we'd taken that, right, that would have been a one-to-one risk to reward, and it would have worked out with pretty good accuracy, and we would have taken profit there. But unfortunately, we did not, and that's okay. Just things to improve on the next time. If we hadn't taken this first trade on an MES contract instead of ES, we would have been less inclined to take that. So let's just keep moving on, see if there's anything that we could have taken. Right here, I think there's actually something to be taken here. At 1019, right here. This is honestly this is pretty perfect, right? We came up to this region. Now we've retraced down. Now, big sellers, pretty important barrier. Point of control is around here as well. Now, let's see what price is going to do. Because right now, this wouldn't be a bad play in any sense. Like, let me show you. We need to get a good entry for sure. Even test that? No, we don't. Because taking a long somewhere around this region should not be a bad play, right? We see those longs occur. We see that seller absorption there. So say we enter somewhere around 50, right? Or was it 50? Yeah, it was 50. Alright, 50, 50, 50, 50. That would be all the way down here. Or 50, so it'd be 55 here. Say we enter around 55, stop around 50. So 20 takes stop loss, since we're going to keep it down. 22 takes stop loss, we're going to keep this down to a late entry at 54. Our target's going to be at 60. So again, one-to-one risk reward here, but if you take a look, that seller absorption provided immeasurable value that these longs would have worked out. Now, honestly, it would not have been something that I personally would have taken simply because we did not actually tap into this barrier. We did see seller absorption, but we did not tap. Now here, we're within a big blob of liquidity, so no trades at all. Potentially something here. Let's see. Let's see. Nothing for that time being. 10:30, 10:30, 10:30, 10:30. At this 6765 region, that's a key liquidity level up here. Potentially something could have been taken there, but I'm not too keen of that. Yeah, honestly, I would not have taken something of that nature. We do see that seller absorption does provide value to work out, but not something I would have personally taken. See those longs coming right there. Now we do see flipping of liquidity, which is a pretty good sign, but 1041, 1041, 1041. But again, pretty tight spread of liquidity. Don't want to mess myself up in there. Pretty good barrier retracement play there though. November, December. And then eventually somewhere around here we start to reverse and head down. I'm not seeing anything we could have taken there, honestly. Spread of liquidity isn't looking as proper there. Not as optimal trading conditions. 10, 11. And then we're starting to see aggressive selling come in with pretty sharp speed. Yeah. Upper liquidity cleared. Those buys will start to come in. There we go. Buys start to come in, and then we see our selling occur again. Those buyers pop in, selling comes in again, and then through this we had pretty choppy action. Yeah, very choppy. I look at these wicks after 10:20. These wicks were crazy. Let's see if there's anything we could have taken though. Yeah, nothing we would have taken. So honestly, that concludes my market analysis session here for today. Pretty good video. Took two trades. One was a winner, one was break even. We did have some unfortunate things that happened today, which we hope can improve tomorrow and the day after. And I'll see you guys tomorrow evening for the market analysis session. So I'm excited to go ahead and see you guys then. But if you guys are curious as to the order flow tools which I use, including the footprint charts and the bookmap charts, check out the links in the description below as well. All the tools which I use have lots of free functionality, and I highly recommend you guys to check it out, especially Addis, which is one of our channel partners. So again, no financial advice, but definitely recommend you guys to check it out. Other than that, if you have any questions, feel free to join the free Discord server or leave a comment down below. The link is in the description for that as well. Now, I'll see you guys tomorrow evening for the market analysis session of the 21st of October. So I'll go ahead and see you guys then. Goodbye.